Local housing authorities have one mission: to provide affordable housing. So then why did the Corpus Christi Housing Authority take ownership of this one? I'm Erin Hawley, your neighborhood news reporter. The Villas of Ocean Drive has a property tax value of $32 million. But because the housing authority owns it, it could pay no taxes. And it's not the only one. The Villas on Ocean Drive, the Icon on Saratoga, South Lake Ranch on Rodfield, all high-end apartments, all owned by the Housing Authority. Just a few of the 13 properties purchased by the Housing Authority in the past 5 months. The Housing Authority claims the purchases increase the availability of affordable housing, but our investigation reveals a much more complicated story.
You know, $350 million is a gigantic series of real estate transactions in this community.
For the past 2 weeks, 6 Investigates has been digging into questions about hundreds of millions of dollars of apartment complex properties that could be removed from tax rolls. Some public officials call these types of moves tax shelters for developers.
Property that's taken off the tax rolls, that then every government that gets the tax revenue from those properties now either has to increase the tax rate for everybody else or cut services, you know, police, firefighters, school teachers.
I went and took our questions to Corpus Christi Housing Authority CEO Gary Alsup. Here's how the deal works. Alsup says the Housing Authority acquires the land at no cost, immediately leases it back to the original owners, and then claims a 100% tax exemption. Former City Councilman David Loeb says that's not how it's supposed to work.
Tax incentives are designed to help nonprofits and governments that are actually building housing for very low income people. And that is not a very profitable business, as you would imagine. The tax exemptions are designed so those properties don't have to pay taxes. They're not designed so fancy apartment complexes on Ocean Drive do not have to pay taxes.
Nueces County Appraisal District records reveal the Housing Authority has done this with $350 million in properties. But Alsup says there are several more deals in the works, which would bring the total to just over $500 million.
I think there's about 21 properties in total, and included in those we are talking with Cameron County about taking over their properties as well.
Why mention Cameron County? Because the Cameron County Housing Finance Corporation owns $200 million worth of property in Nueces County as well. In 2022, those properties were removed from the tax rolls and have resulted in a loss of $8.4 million in unpaid taxes through 2024. Ben Martin is the research director for Texas Housers, a nonprofit focused on low-income housing in Texas.
Cameron County Housing Finance Corporation is sort of the poster child of abuse of this Housing Finance Corporation tax exemption. Housing finance corporations are formed by local governments to provide low-income housing for residents in their service area.
I spoke with Williamson County Commissioner Russ Bowles, who is battling similar deals in his precinct just north of Austin. His county filed suit seeking to stop deals made with the corporation in Cameron County.
You know, the people that need help with lower rents, these projects aren't delivering to these folks. And it is, it's just tragic. It is it's a money grab.
Let's break down some numbers here in your neighborhoods. The recent properties acquired by the Corpus Christi Housing Authority have a tax value of $350 million. That equates to a property tax bill of around $7.4 million. In order to avoid paying that bill, these apartment complexes must set aside half of their apartments for people who make 80% or lower of the area's median income, or AMI. In return, the Housing Authority receives a payment.
I don't have the numbers in front of me, but probably $900,000, $1 million a year total. Again, we're not. The purpose here is not to get rich.
Alsup contends this provides income-adjusted rents at a complex that otherwise would not provide them. We obtained this document sent to residents at the Villas of Ocean Drive. It shows the rent for those who qualify at both 80% and 60% of AMI. But when you search for available apartments online, the Villas advertises several units at lower rent without any exemption. While Allsup praises the benefits of this program, experts I spoke to say workforce housing doesn't really benefit the public.
Especially affordable rental housing is by far the greatest among households that are making 50% of area median income and below, and especially 30% of area median income and below. These are the populations that housing authorities in particular were created to serve.
This is a new opportunity to provide housing for those folks that need it. It is for new families. It is for those folks that are caught in the middle. Too many times we do things for ultra low income.
Allsup also downplayed the impact of removing these properties from the tax rolls.
Is it a complaint that we're taking things that are on the list and or on the property rolls and taking them off? I can own that too, but I'm also going to suggest we're talking about 1%. It's a rounding error in their budgets.
Loeb says that rounding error will directly impact our neighbors right here in Corpus Christi.
It's kind of giving one high-end private business a benefit, not adding any more housing actually to the community, and distributing the cost amongst everybody else.
I can tell you that state statute is very clear that all property of the housing authority is tax exempt. So
while Allsup says the Housing Authority has applied for the tax exemptions, the Nueces County Appraisal District tells 6 Investigates that they don't have any formal application. The district also said that should the authority apply, it's likely that those properties will qualify for one. Workforce Housing Initiative properties in Corpus Christi account for almost $800 million that could be removed from property tax rolls. That's $17.5 million in unpaid tax. For 6 Investigates, I'm Erin Hawley.